Very good morning, everyone. Hope you all must be doing great. So let's start with the basics. Today we have to do TDS, TCS, advanced X, and before that we would like to complete uh, the set of first. See, if I talk about the changes in default regime and optional regime as far as set off is concerned, so there is one change in house property. Everybody please write with me. See, there is only one change, that is house property losses. So if we have house property losses, how we will deal with them in optional and default regime? We know that first of all, we have to set off the losses which is coming from the same head, that we call intra head. What does intra head means? So there is an house property 1, there is an house property number 2. House property 1 has a, let's say, loss. House property 2 has a profit. So when we are setting it off from the house property itself, it is called intra head, same head. But in case house property, we are setting it off from any other head, salary, PGBB, etc. That is called inter head, different head. Correct? That we all know. So what is the difference between optional and default regime as far as intra head is concerned? So I'm talking specifically about house property. If you set off intra head means same head. That is house property 1 from house property number 2. Then there is, you can easily set off allowed up to any limit. So there is no such limit like 2 lakh, 3 lakh, 4 lakh. No, you can set off any amount of loss intra head. Same head you can set off. And it is same in default regime also. It is allowed up to any limit. If it is same head. However, if it is inter head, there is a house property loss and you would like to set it off from any other head. Let's say salary, house property, etc. Salary, PGBP, capital gain, etc. If it is inter head, that is different head. If it is inter head, that is different head. It means that there is a loss in house property and you would like to set off from salary or PGBP or capital gain or IFOS. That is different head. In optional regime, it is allowed, but maximum rupees 2 lakh. You can set it off from other heads also, but maximum 2 lakh. And if still there is a loss, let's say house property has a loss of 2 lakh 40,000. So we can set it off from salary, PGB, etc. maximum 2 lakh. So what about remaining 40,000? That will be carried forward. Remaining to be carried forward. Remaining carried forward and can be carried forward for 8 years. Correct, Kishore. Remaining would be carried forward. But as far as default regime is concerned, inter head is not allowed. Inter head is not allowed. We cannot set it off from any other head. We can set it off from the same head, that is intra head, that is okay in default, but from different head we cannot set it off. So if we cannot set it off, what will happen? We will carry it forward then. So in that case, entire HP loss to be carried forward for 8 years, obviously. Have you done this? Very good. So this is the only difference in optional regime and default regime as far as losses are concerned. For PGBP losses, for other uh, capital gain head losses, there is no such difference. So there is no difference. Only in house property there is a difference, and it is an important difference. You should know about it. Okay. Second thing, which student face a challenge is in presentation of the set of questions. That how do we present? Because whenever you would like to write this answers of set of questions, you end up cutting so many of things. You just cut this, cut this, cut this. There is so much of cutting. There is so much of untidiness in your answer. So what is the solution for this? How you should present your set of questions? Presentation of set of questions. And this chapter is, I'm telling you that this chapter is an important chapter from examination point of view. You can see most frequently it is repeated. Most frequently, this is one of the frequent chapters which is repeated. So if I'm not wrong, if I'll say that in almost every attempt you see set of questions, in almost every, barring one or two, in almost every attempt you see set of questions. And this is an easy chapter, one of the smallest chapter, like clubbing itself. It's one of the smallest chapter, and please don't lose marks in it. Don't lose marks in it. You can gain good marks in it. It's a kind of bonus question in examination. So how you should present it in a minimum time, in a time efficient manner. See, when you will receive your copy, so the last page of your answer sheet, that is called rough work. The last page is the last page of your examination answer sheet, right? You can use it as your rough work. So I have told you before also, at the time when you will be submitting your sheet to the invigilator after the examination at 5 p.m. So you can cut this sheet. It is not working note, it is rough, correct? So use your rough sheet. Use your rough sheet, and at the time of submitting, please cut it off. Just cut it off. Just draw one line, cut it off. Now, presentation of set of questions should be first in your rough work. In your rough work, what you need to do is you need to see that which particular losses can be set off from which particular profits, right? So first of all, do your rough work. Calculation, do some calculations first, that whether I can set off this loss from that income or not, right? It will not take more than 2 minutes of yours to do this entire exercise. Second is that you should, first of all, only concentrate on your current year losses, current year expenses or current year losses. Only concentrate on your current year losses. If there is any losses, so let's say if our previous year is 24-25, right? So whatever the losses which belongs to this year, concentrate on those first. Try to set off those first. There in your question, there might be some losses which are being carried forward from last year's, which we call brought forward losses. So don't look at your brought forward losses right now. First, always concentrate on your current year losses and try to set off them first. If they are now fully set off, or if they can't be set off, then you will carry it forward. That's okay. But please give your give that particular thing to your current year losses only. After that, once your current year losses are settled, either they are set off or now you understand that they will be carried forward. Once they are settled, then the last thing should be look at your brought forward losses. This is how you should approach the set of questions. Now you have to look at your brought forward losses. And you understand, whenever the losses are being brought forward from the last years, it will be set off from the same head. So if it is, let's say, house property loss, it will be set off from house property only, which are being brought forward from the last years. If it's a PGBP loss, it will be set off from the PGBP only. This we all know, correct? Because brought forward losses always set off from the same head, except unabsorbed depreciation. Unabsorbed depreciation can be set off from any thread also, except salary. But other losses, capital gain losses or PGBP losses, these will be set off from the same head, brought forward losses. So this should be your criteria. These should be your steps. Do the rough calculations of what? Current year losses, then brought forward losses. I believe that you have written this. Now let us work on it by some examples. Look at this question, number 1. It says, Ram submits the following information for the financial year ending 31st March 2025. Compute the total income as per the optional regime and ascertain the amount of losses that can be carried forward. Okay. So here we are required to compute the total income of this year as per optional regime. And we need to ascertain that if there is any losses which needs to be carried forward from here, what are those losses? The amount of those losses. Okay. It says he has 2 houses. House number 1, house number 2, HP1, HP2. Income after all statutory deduction, it means that it is a computed income of house property, 72,000. So we have 72,000 from HP1 and HP2 is a current year loss. And I told you that you can give first of all, you have to set up the current year losses. So there is HP number 2, which is 30,000 rupees. So in your rough calculation, you can first of all, we understand that current year losses we should set off first. And first of all, we have to set off from other heads or from the same head? From the same head, obviously. Correct? Everybody remember this? We should set it off from the same head itself. So right now I got an idea. Correct, Kishore, same head. So we got an idea that this 30,000 should be set off from the 72. So we will be remaining left with 42,000 in house property positive. Okay. This we have done in rough. We'll not be writing all these things, but just in your rough, we'll write HP. Right now we have 42,000. Okay. You got this. Then second point, it says he has 3 proprietary businesses. Textile business A, chemical business B, leather business C. So he has a 3 proprietary. Proprietary means he is an individual. He is the sole owner. He is having 3 business, textile, chemical and leather. Let us see what's there in this business. Textile business discontinued from 31st October 2024. Guys, 31st October 2024 is falling in our year, previous year 24-25, and current year loss. So we understood that textile business has a current year loss. Okay, whatever the loss is, 40,000. So this is a loss. Brought forward business loss of the assessment year 2021. Okay, so there is a brought forward losses also, but I will not concentrate on brought forward losses right now. So I'm writing it over here for sorry, for your convenience, pending. So I will not look at my brought forward losses right now. Current year losses, it's okay for me, I can take this, but brought forward losses I will look at the last. Now he has a chemical business discontinued from 1st March 2002, hence no profit, no loss, nil. So he has a chemical business earlier and he shut down that business 2 years back, and there is no profit, no loss in this year. Okay. Bad debts allowed earlier years recovered during this year, 35,000 rupees. Guys, what is this? Bad debts recovery. So there is a old business, we have shut it down 2 years back, but this year we have recovered some bad debts. What it is? Is it a PGBP income or not now? So whenever we recover bad debts, so it becomes our PGBP income, deemed PGBP income of the year in which we have recovered our bad debts. Everybody is okay with this, right? So it becomes very good. It becomes our PGBP income. So now this is our PGBP income of current year, 35,000. Okay. Third point, it says brought forward business losses. Again, this is brought forward business losses of last year. I will not look at it. Let me write it over here, pending. This is brought forward again. So there are two brought forward as of now, but I have here and here. So I'm not taking this into consideration right now. Leather business, profit of the current year is 1 lakh. Okay. So profit for the current year is 1 lakh. So now, first of all, current year, PGBP. So 1 lakh, we have a profit. 35,000 is also the deemed profit, bad debts recovered. And in that business, 40,000 is the loss. So we will do in rough calculation that for current year, PGB, there are 3 PGBP, 1 loss and 2 income. So first of all, I will set off my current year losses with my current year income. And you know that this is a one assessee. He is having 3 different businesses. It's his own PGBP 1, PGBP 2, PGBP 3. He can easily set it off. So from this, 35 plus 1 lakh, 135 minus 40, I'll get 95,000 as my PGBP for the current year. I will get 95,000 as my PGBP for the current year. Everybody understood this or not? Good. Correct. Very nice. Now I have my current year PGBP. Okay, there is one more thing. Let me read it. Share of profit in a firm in which he is a partner since 2012. Share of profit. He has received share of profit 16,550. Guys, which income it is? Share of profit from a firm. From a firm, he's a partner. He has received share of profit. Which income it is? If you, okay, share of profit from the partnership firm. Okay. Okay. Please write. Please write. Concept of partnership firm. Everybody please write. Concept of partnership firm. If partners receive, this could be okay, interest on capital. If partners receive interest on capital, if partners receive other remuneration, if partners receives other remuneration is like salary, bonus, commission, etc. And if the partners receive share of profit, if the partners receive share of profit, and let's say this is working partner or a non-working partner. One line for working, second line for non-working. Whenever a partners receive interest on capital up to 12% per annum interest, up to 12% per annum interest, it is the PGBP income of both the partners, whether they are working, whether they are non-working. in excess of 12%, not an income of partner. So only up till 12% it is an income. In excess of 12%, it is not an income for the partner. Why? Because it is not allowed in the partnership firm. Partnership firm will pay tax. Partner will not pay tax. If we are getting, so if there is a partner A, he is getting 10% rate of interest, it can be his income. If B is getting 12% rate of interest, it can be his income. If C is getting 13% rate of interest, then up till 12% it is C's PGBP, but not entirely. I'm so sorry. 1% will not be his income. So up till 12% is his PGBP. 1% he will not pay tax because his firm will pay tax. Correct? Everybody understood this also? First of all, tell me, everybody understood this? Very good. Other remuneration. Very good. Other remuneration, when they get salary, bonus, commission, etc. For working partner, it is a PGBP income. As of now, you can understand working partner is a PGBP income. Although there is one more thing, the students who know about 40 small b, it is PGBP income up to the limit of 40 small b, but right now I'm not writing it. As of now, this much is sufficient. So if it is the partner is receiving salary, bonus, commission, other remuneration from the partnership firm, because it is allowed to the firm, so it becomes income for the partner. But for non-working partner, it is not an income, not taxable. Not taxable for partner under any head. Under any head, it is not taxable for partner. Why? Because on this amount, it is not allowed for the firm. So it is added in the profit of the partnership firm. Partnership firm pays tax. Partner does not pay tax on it. See, I'm again repeating, for working and non-working, interest on capital is same. See why? Because interest on capital, even if it is an inactive partner, sleeping partner, non-working partner, he's getting interest on capital. Why? Because interest on capital is on the capital invested. It is not on that you will be working in the firm actively. No, it is on the capital invested. So if a partner says that I'll be a sleeping partner, I'm investing my capital, still he should receive interest on capital. But salary, bonus, commission should only be received to that partner who is actually an active partner. Who is a non-active partner, he should not receive. Even if he is receiving, it is not allowed for the firm. Partnership firm will pay tax. Partner will not pay tax. Understood? It is not taxable. Share of profit. See, what is share of profit? Whenever a partnership firm, so let's say Deepa, you and Pradeepa. Deepa and Pradeepa are the partners in a firm. So there is a firm. This firm, I understand in the income tax point of view, it has its own PAN number. I understand it's a separate entity. But please tell me, this firm belongs to whom? This firm belongs to Deepa and Pradeepa. Correct. This firm belongs to T and P. So if firm is paying tax, actually it is pinching on partners only. At least I can say that indirectly it is going from the pocket of partners only. Agree. So if firm is paying tax, why partner will pay tax? So on profit, whatever the profit with firm earns, let's say firm has earned 10 lakh rupees of profit. Firm has earned 10 lakh rupees of profit. Firm will pay 30% tax. 3 lakh rupees tax they will pay. And they will be left with 7 lakh rupees. Right. Now 7 lakh rupees will be distributed 3.5 between the partners, let's say equal to T and P. So what do you think? Whether they will pay tax again? It would be a very, very big hardship on them. Their firm has paid 30%. You can't say that firm has paid it. Who is the firm? Indirectly partners. So if firm has paid 30% tax, now if this after tax we are getting the money, then should we again pay tax? Never. Share of profit is not taxable under the hands of partner. Whether they are working, non-working, doesn't matter. Not an income, not taxable at all. Not taxable, not taxable. Understood now? So whether in your total income question also, there's a P&L account. Let's say Pradeepa is having a P&L account. She is having other business also. And she has a P&L account. And she is a partner in a partnership firm also. And here you will write, you see that by share from partnership firm. Why? Because Pradeepa is carrying her individual business. And she is also a partner in a partnership firm. She has received share of the partnership firm, whatever the amount is. Please delete it from here, and where you will take nowhere, because it is not an income. Have you understood this or not? Have you made it? Have you understood this or not? Good. Good. So in this case, it's a share of profit in a firm in which he's a partner. This 16,550, it is an exempt income. It is not taxable. It is an exempt income in the hands of partner. What you will do? You will not do anything. See, if there is any exempt income, you will not do anything. If it is there in the exempt loss, what you will do? Not do anything. Guys, exempt means exempt. Positive is exempt, negative is exempt. It is again one of the important point in this particular question. Not exactly in this question, but in these type of question. Examiner will confuse you. See, whenever you will find agriculture income from India, it is exempt. Whether it is positive, whether it is negative. So if you find that the examiner is giving you agriculture income from India, negative. So what student does is, what student make a mistake is, they set off this losses from PGBP or other heads. No, either it is positive, either it is negative, it is exempt at the first place. So you should not consider that. Everybody understood? So even if this is positive, it is exempt. Even if it is negative, this negative should also not be set off from anything, because it is coming from an exempt source. Everybody understood this or not? So if you find agriculture income positive, please ignore. Agriculture income negative, ignore, not to be set off from anything. Ignore. Okay. Then we have short-term capital gains. Okay. Short-term capital gain, 60,000. Long-term capital loss, 35,000. Okay. Please write. Capital gains. Long-term or short-term. So to simply put, I can say that capital gain has a big ego problem. He has an ego problem. And the people who have an ego problem, these guys are very proud and they don't take help from others. So capital gain has ego problem. So you can actually say that the losses, the capital losses, capital CG losses cannot be set off from other heads. So it has ego problem. Its losses cannot be set off from other head, but they can help others. If PGBP has a loss, they can help, but they will not take help. If they have a loss, it will be set off from capital gain only. From capital gain only. It cannot be set off from other heads, from CG profits only. Correct? Long term is an elder brother. He's an elder brother. And short term is a younger brother. So elder brother has more ego. Younger brother has less ego. What does it mean? Long term will not take even help from his younger brother. Long term will take help only from long term, not even short term. Because short term is his younger brother. How can he take help? He has more ego, right? He will not take help from younger ones. But short term has less ego. Short term losses can be set off from short term also, from long term also, no issues. But long term losses will be set off from only from long term. Have you made it? Good. So these guys have ego problem. They can help others. They can help others. If let's say house property has losses, they can help in optional regime. See, in default regime, they can't help because house property losses cannot be set off from them. But other heads, they can help. Let's say PGBP has losses, they can help. Or any other head has losses, they can help. But they will not take help. They will not take help. They have ego problems. Now, short-term capital gain, 60,000 positive. Long-term capital loss, 35,000 negative. What do you think? That this is a long-term loss, this is a short-term profit. What do you think, guys? Can it be set off or it can't be set off? Long-term has ego, more ego. Will he take help from his younger brother? No, he will not take help. It will be carried forward, correct? So it will be carried forward. See what we are doing it. I have not seen anything regarding brought forward. Very good. Very good. It cannot be set off. It will be carried forward. Mandatory. So what we have done is we have done current year losses, etc. We have not seen brought forward. Brought forward now we'll be seeing it. Okay. One more thing is left. Contribution to LIC towards premium 10,000. This is not an income. This is actually a 80C deduction LIC, 10,000 rupees. So this is the deduction under chapter 80C. We will take it. Now, so we got, so in capital gain, guys, how much would be the income? Can you tell me in capital gain, how much would be the income now for the current year? 35,000 loss will be carried forward. So short term, we have income, right? So 60,000, we have capital gain income this year. Short term, we have income, 35,000 to be carried forward. Okay. So now we have the house property income as 42. PGBP income as 95, capital gain as 60,000. Correct. Now let us see the brought forward thing also. Brought forward losses. And you understand, last 8 years losses can be carried forward. Last 8 years losses can be set off. But if it is beyond 8 years, so please also remember that if examiner is giving you any losses, which is beyond 8 years old, so it is expired, you can't set it off. Right? Losses, PGBP losses can be carried forward only for 8 years. So if there is any loss which is already expired, lapsed, please don't consider that loss. Right? Speculative business losses can be carried forward for 4 years. So if there is any speculative business loss which is 4 years old, more than 4 years old, so now it is a dead loss, you cannot set it off. Right? So you have to mention that now it is lapsed, it is expired, so we can't set it off. Okay. Now guys, let us look at the brought forward. So we have two brought forward losses also. So brought forward business loss of assessment year 2021. We are in previous year 24-25. Okay, not that much old. It's not that much old. So we can set off 95,000 we can take. Brought forward business loss for assessment year 22-23. This is also not yet expired, so we can take this also, this also. Guys, which one you will give priority? The older one you will give more priority, correct? The older one you will give priority. So you will give priority to this. Then once it is settled, you will give priority to this. Now please tell me, guys, some students make this mistake also. I just told you that any losses which are being brought forward can be set off from their own head only, except unabsorbed depreciation, right? So it can be set off from own head only. And most of the time I see, especially in test papers also, I see that many students make this mistake, that they set off this brought forward losses from capital gain, they set it off from house property. Why? Any losses which is being brought forward can be set off from that head only. It's a thumb rule. If house property has a brought forward, now in this year, it will be set off from house property only. PGBP from PGBP only. Capital gain, obviously, capital gain is from capital gain only, obviously. Agree? So these losses, 95,000 this, 50,000 this, can it be set off from any other head now or only from PGBP? Only from PGBP. Please don't make this mistake. Correct? Now, in this case, how much PGBP we have right now? 95,000. Guys, which one you will give priority? The older one you will give priority, this one. So this 95,000 will be set off from here, loss, and my PGBP income will reduce to 0. Everybody is okay with this? My PGBP income will reduce to 0. Correct? Now guys, what will happen to this loss, 50,000 loss, which you cannot set off? It was a brought forward loss. It could not be set off here. Can I set it off from capital gain or house property? Never. It is a brought forward. So it will again be carried forward. So we still have some time. So it will be carried forward. So two things will be carried forward. One is your long-term. One is your this long-term loss. And second is this. It will be carried forward. So now, guys, I was explaining, so I took this time. But I'm telling you, in your rough work, when you will do, you will not take more than 1 minute to do it. Now, we got our answer that now house property income is 42,000, PGBP is 0, and capital gain is 60,000. We got our answer, correct? And there is a deduction also that we will give. So now we have an idea that how will we presenting it. Now let us come to the presentation part. Computation of total income. What's the name? Ram. Assessment year 25-26. House property income. House property 1. House property 2. 72 and 30. So we know that in outer column it will be 42,000, and we are sure about this because we have already checked in our calculations. It will be 42,000. Then we have PGBP. First of all, current year. First of all, current year. So in current year, 3 businesses were there. Out of 3, 2 have profits, 1 has losses. Leather business has a profit 1 lakh. Chemical business has also deemed profit 35,000. Leather business 1 lakh. Chemical business, this is bad debts recovered. 35,000. And current year, there is a loss in textile business 40,000. have taken everything for current year. So I got 95,000. And I know now less brought forward losses. 95,000 are being set off. PGB becomes 0. And I already know about it now. Correct? Then capital gains. Short-term capital gain 60,000. Correct? It was 60. Correct. Short-term capital gain 60. So my total GTI comes to 1,02,000 minus chapter 6A, 80C deduction. 10,000 was the LIC premium. So total income comes to 92,000. Correct, Deepa. Aditya, correct, correct, Deepa. Now, we have to write the second point also. And even if the question would not have asked, we have to write that what are we carrying forward. Carry forward. Long-term capital loss. $35. Second is this 50,000 brought forward business loss for this year. This was chemical business. These two would be carried forward. Correct? See, simple. So once you are done with your rough calculations, you will find that this presentation becomes very, very simple. And it will save a lot of time and your presentation will look good. Correct? Let me discuss one more question with you. Okay. Question number 2. Following are the details relating to Srivatsan, a resident age 57 years relating to the year ending this. What we need to compute? Compute the total income. We need to compute the total income and show the items eligible for carry forward as per the optional regime. Okay. We have to follow optional regime and the things to be carried forward. Okay. So we have been given income from salaries. Income from salaries is 220. Okay. Positive. Loss from house property 290. Guys, it's a loss. We are following optional regime. Can it be carried forward? Can it be set off from salary or not? Let's say there is no other house property. Can it be set off from salary or not? Yes, it can be set off from different other heads also, but maximum 2 lakh. So it could be set off from this also, but maximum 2 lakh. So after that, my income will become 20,000. Correct? And 90,000 to be carried forward. I believe everybody understood it. 90,000 to be carried forward and my income will become 20. Loss from clothes business of the current year is 240. Loss from clothes business for the current year, it is 240. Okay, current year, it's a current year loss. Okay, current year loss. Income from speculation business is 30,000. Okay, it's an income, PGBP income. Loss from specified business, this is also PGBP, negative. long-term capital gain, loss from card games, income from betting, life insurance premium paid. Okay. So these are 3 PGBP. Guys, what do you know about specified business loss? What do we know about specified business loss? Specified business loss can be set off only from specified. Those 14 businesses. We have done this in that. It can be set off from those 14 businesses only. So let's say it's a 2-star or above category hotel. It can be set off from hotel also, hospital also, beekeeping business also, cold storage facility also, but only only among 14 businesses. So this is a loss from specified business 20,000. Compulsory it will be carried forward, and it can be carried forward for unlimited years. Specified business losses for unlimited years. I believe everybody understood this. Now, income from speculation business. See, losses from speculation can be set off from speculative only. But if they have income, then other normal business losses can be set off from this income also. Normal business loss can be set off from any business. Correct? Normal businesses can be, which are not speculative, non-specified, normal business can be set off from any business also. Correct? But vice versa is not correct. Speculative losses only from speculative. Specified losses only from specified profits, not from normal profits. But vice versa, normal business losses can be set off from them. Now, 240 is the normal business loss. 30,000 is the speculative. Can it be set off? Yes. So it can be set off. My PGBP income will be nullified to 0. Why? Because there are only 3 PGBP. 2 have losses. This 240, 20,000 has losses. And this 30,000 is the only profit, and that too has been set off. So this is now used in set off. My PGBP is giving me 0. And still how much it is left? 2,10,000. Everybody agree? 2,10,000 is left in PGBP losses. Now what I'll do of this 2,10,000, guys? What I'll do? This is left. What I'll do? Will I carry it forward, or I can set off from other head? Okay, I'm giving you 2 options. Should I carry it forward, or I can use other heads? What do you think, guys? Give me an answer. It could be right or wrong. Doesn't matter right now. See, this is current year losses. Current year losses can be set off from other heads. Brought forward losses cannot be set off from other heads. Correct? So current year losses can be set off from other heads. So if PGBP has a current year loss, it can be set off from any other head also except salary. So except salary, it can be set off from anything. So this 2,10,000, this 2,10,000. So before carried forward, see, if this would have been brought forward losses of the last years, then only PGBP is there. But if it is current year losses, it can be set off from other heads, except salary. So we have salary 20,000, but this 2,10,000 cannot be set off from salary, but it can be set off from other heads. Let us see if we have any other heads income or not. Long-term capital gain from sale of urban land is 250. So right now, what I have right now, what is I have 20,000 rupees of salary, PGBP 0, and 90,000 house property will be carried forward. Specified businesses will be carried forward because it cannot be set off from other heads. It will be carried forward. But still, we have current year PGBP loss. We have current year PGBP loss. Now, long-term capital gain. So this is long-term capital gain, long-term positive. Loss from card games. Okay. Tell me, guys, it's a loss from casual income. What I'll do? Loss from casual income. Casual income losses cannot be set off from anything. Neither set off, not carry forward. They are dead. They are dead. So I will not do anything for 32,000. Casual income, casual sources, losses will not be set off. Anything related to casual, no expenses are allowed, no losses are allowed. So neither it is carried forward nor it is set off. Understood? Income from betting, 45,000. It is casual income. It is casual income. Income from betting. Guys, can I set off? It's an income. We have to pay tax. And always 30% is mandatory to pay tax on it. Can I set off any losses from casual income? No, it's a thumb rule. If there is any loss, you cannot reduce your casual income. You have to pay 30% tax on your casual income. You cannot reduce it. So no losses can be set off from casual income. So what I said here, losses from casual income are not a loss. It's a dead loss. We cannot use it. It's a dead loss. And if we have income from casual income, we cannot help others. We cannot help others because if we help others, it will be reduced. It can't be reduced. Casual income, you have to pay tax. Okay. So now, and this is life insurance premium 120. That's okay. Now, guys, long-term capital gain is 240 and PGBP loss is 2,10,000. This is the current year PGBP. Can this long-term help PGBP or not? Whether this long-term is taking help or he is giving help. He is giving help. Correct? He is not taking. He is giving help. So if he is giving help, so yes, it can be used. So 2,10,000 will be used over here. So it will be 40,000. Everybody understood? So now we are left with salary 20, PGBP 0, capital gain, that is long term 40,000 rupees. That's it. And casual income also 45,000 rupees. And carry forward, will be carrying forward this 90,000 house property, 20,000 PGBP will be carrying forward for specified businesses. That's it. And 120 is the life insurance paid. Everybody, please with me. Everybody with me. Solution number 2. Computation of total income. Whatever the name of the assessee is. Assessment year 25-26. And we are following optional regime. Salary. Income under salary 220. Now sometimes students ask me that, sir, whether we should give standard deduction from here 220. No, see what it is written income from salary. If it is written income from salary, it means it's a computed income, right? Sometimes if in your question it is written that he receives salary 40,000 per month, and so it means that it is per month salary. You will get 40,000 to 12 as gross salary. There you have to give deductions, right? So it is directly written income from salary. So we always assume that it's a computed salary. This is one of the question which I get from students. It's a computed. Whenever there is written income from house property, it means it's a computed income. Income from salary, it means it's a computed income. And even if you would like to be on safer side, you can also make an assumption over there. It is assumed that it's a computed income after standard deduction. Correct? So income under salary is 220. And we know house property loss will be set off. House property loss is 2,90,000. But maximum 2 lakh will be set off from here. So I will be left with 20,000. I will be left with 20,000. Correct? Then PGBP. So we have three PGBP. One PGBP was income from speculative business. First, I'll write profits. Speculative PGBP was 30,000. It was 30,000. Then less. We have cloth business loss 240. Cloth business loss 240. Still we have a loss of 210,000. That we'll be using in capital gain. PGBP will become 0. Capital gains, because why I am sure about it, because we have done the rough calculations. Capital gains, we have long-term capital gain 250. This is long-term capital gain minus PGBP current year loss 210,000. We know that we are setting it off from here. So we are left with 40. We are left with 40. Now we also have IFOS income. We also have IFOS income. So IFOS income we have income from betting 45. So we have 20 plus 40 plus 45. 1,05,000. This is the GTI minus deductions under chapter 6A. Since we are following optional regime, correct TIPA 1,05,000 minus deduction under chapter 6A. 80C, we have life insurance premium paid, and then we'll get our total income. But let us write the things also which we are carrying it forward. Note. Carry forward. What are we carrying forward? House property loss of 90,000 to be carried forward. First, HP loss rupees 90,000 to be carried forward. Simply write in your examination like this: HP loss 90,000 to be carried forward. Second, PGB was set off, but only specified business loss of 20,000 to be carried forward. Specified business loss of rupees 20,000 to be carried forward. Are you all doing it with me now? Then that's it. Now we will also tell them that why we have not taken loss from card games. Note number 2. Card game losses cannot be set off. Card game losses cannot be set off. Okay. Have you done till here, everybody? Very good. Very good. Now, life insurance premium paid 120. Guys, how much we can take? We have GTI 105. So we have paid LIC premium. See, till 1,50,000, it's okay. So how much we can take? So we cannot take 120, right? So how much we can take? 1,05,000? No. 1,05,000? No. I told you na yesterday. Chapter 6 deduction is only and only from our normal income. Tell me how much is my normal income? How much is my normal income? This is the GTI. See, what does it consist of? It consists of long-term capital gain 40, special. Long-term capital gain is a special income. IFOS betting casual income is special. So guys, 1,05,000 out of 1,05,000, you will see that we have 111A. No, we don't have 111A. Whether we have 112, 112 is long-term capital gain. Yes, we have 112, 40,000. We have 112A. No, we don't have 112A. Long-term capital gain on equity shares. Do we have casual income? 45,000. Yes. And the remaining income, the balancing figure comes to 20,000 rupees. Maximum you can take 20,000 rupees only chapter 6. So chapter 6, 80C, LIC, although it is 120, but maximum you can take 20,000 only from your normal income. So your total income will become 85. Understood? Don't make this mistake. Got it? Very good, very good, very good. Okay. So these are some of the important points in set off. Remember these points, that how you will be presenting it, from which particular losses you will be setting off which particular income. Let us come to TDS. Let me discuss some important sections with you. PDF is 30,000. This one. I think I've Deepa, when have you seen this? When have you downloaded this PDF? Today in the morning? Today? In deduction? Okay. Deduction chapter. Okay. Actually, there was some calculation error. Actually, what I did is I have changed this amount today. Earlier it was 190. So I changed this amount. So please download this PDF of TDS. Right? Oh, here. Oh, here. Actually, I made a change there, but I forgot to make the change here. So please, I'll re-upload that. Don't worry. It is 20. It is 85. Correct? Because earlier, in the morning, it was 190, but I specifically made it 290 to actually explain you that maximum 2 lakh we can take. So I have made changes here, but I forgot to make the change here. It is 20,000. Correct? TDS. Please write with me, guys. I'll be discussing some important sections first. In TDS, there is no change in optional regime and default regime. There is no change. Everything is same in TDS. But yes, there are few amendments are there in TDS, which has happened, which is effective from 1st October 2024. So actually in this year, which our previous year is 24-25. So first 6 months and the next 6 months. Next 6 months started from 1st October 2024. There are some changes in the rates of TDS. And mostly you will see that earlier the rates where it was 5%, they made it 2%. This is a major change. So earlier, not on all sections, but in most of the sections, earlier the rate was 5%. They just made it 2%, which is with effect from 1st October 2024. I'll be telling you which sections are these. But yes, this is one of the amendment in TDS. Okay. So TDS. Let me first discuss about section 193. 193 is interest on securities. What is interest on securities? So if you are receiving interest on your debentures, what are securities? If you are having debentures, if you are having bonds, these are securities. See, shares are also securities, but on shares you don't receive interest. So there is another section 194, TDS on dividend. So I'm not using the word shares also. So here, section 193 says interest on securities. So whenever you receive interest on securities, the rate of TDS is 10%. Generally, the threshold limit is 5,000. Important note, no TDS on securities issued by government. If you have purchased any government securities, so government has issued these securities, let's say government has issued some certain bonds. So if you purchase these bonds, the interest is taxable, but TDS will not apply. They will not deduct TDS. So they are giving you an incentive that please purchase our bonds. We will not deduct TDS on this. So if you have debentures of any company, you have bonds of any other company, the rate of TDS would be 10%. If you are receiving more than 5,000, they will deduct 10% on the entire amount, right? So let's say if you are receiving 6,000, then on first 5,000 no TDS, no, on entire 6,000, on entire 6,000. So if this money exceeds this limit, then TDS is activated. TDS becomes activated. So if during the year you are receiving only up till 5,000, TDS will not be activated. But as soon as it increases by 5,000, TDS will be activated and TDS will apply on all the amount. So let's say if you are receiving 6,000 rupees, so 10% into 6,600 would be the TDS. Correct? No TDS on securities issued by government except please remember these word taxable saving bonds. These are also government securities. Please remember this word by the name taxable. Taxable. Whenever you will see taxable saving bonds, TDS is there. And one more amendment they made it this time. Floating rate interest bond. Floating rate interest bond. This is an amendment this year. So if you will purchase floating rate interest bond, then also TDS will be applicable. So except on these two, and here the limit is 10,000. The threshold limit is 10,000. So if you are receiving on these bonds up till 10,000 rupees, TDS will not be activated. As soon as it increases 10,000, TDS will be activated on the entire amount. So let's say if you are receiving 11,000 rupees from this, 11,000, 10% on entire amount, TDS would be applicable. Have you written this? This is 193. You should know this. Very good. Very good. Now, there is an important section also related to interest. That is section, and this section is more important. 194A. This is a more important section. This is TDS on interest other than securities. Interest other than securities. Interest other than securities. So let's say if you are receiving interest and you have not purchased securities, but still you are receiving interest. Why? Because you might have deposited money in the bank. So you are getting saving interest. You are getting FD interest. You are getting other interest from the banks, financial institution, post office, etc. That is not interest on securities. That is other interest. Also, let's say if you have given a loan to someone. Let's say if you have given a loan to one of your friend and this friend is a partner in a partnership firm and he's saying that, can you please give the loan to our partnership firm? So you have given the loan to him. So that partnership firm is giving you interest. Have they issued any securities to you? The answer is no. They have not issued any securities to you. You have just given the loan, right? They have not issued any debentures to you. Partnership firm can't issue debentures, right? So they have not issued any debentures to you. They have not issued any bonds to you. You have just given the loan to them. They are giving you interest. So if we are getting this interest also, TDS, it is our income, TDS will be deducted. So if you are receiving interest other than securities, so it is important that from whom you are getting this interest. If you are receiving this interest from banks, post office, or financial institutions, then the threshold limit is 40,000. In case of senior citizen, it is 50,000. The rate of TDS is 10%. It's a common rate. The rate of TDS is 10%. So if you are getting money from any bank, that bank, you have deposited something in bank, saving account interest, FD interest, etc. Bank is giving you money. So up till 40,000 rupees in a year, TDS will not be activated. But if you receive more than 40,000 rupees, TDS will be activated on the entire amount. And guys, see, if you are having an account in SBI, you have account in PNB, and SBI is giving you 40,000, PNB is also giving you 40,000, and you are receiving 80,000. Whether TDS will be deducted? No. See, SBI would not be able to know now that how much PNB is paying. So SBI will see from their point of view that how much we are paying. PNB will be seeing from their point of view that how much we are paying. So although you are receiving 80, but you are receiving 80,000 from different assessees, from different people. So here SBI will not deduct the TDS because it is not activated up till 40. PNB will also not deduct TDS. Correct? But let's say there is SBI branch number 1, SBI branch number 2, SBI branch number 3. And these all three are SBI branch only. From here you are getting 20. From here you are getting 20. From here you are getting 15. Now 20, 20, 15. Total 55,000 you are getting. And who is paying it? Different branch, but although the person is one SBI. So here it will be aggregated. So for one bank, its branches would be aggregated, but different banks will not be aggregated. I believe it's clear to everybody. Correct? Now, so please remember the TDS amount is 40,000. It will be activated. It will not be activated until it is 40,000. As soon as it crosses 40, TDS will be activated on the entire amount. For senior citizen, it is 50. And if you are getting other interest, what is other interest? You might have given a loan to someone. You might have given a loan to someone, or any other interest which is not getting, you are not getting from, it is not securities, it is not from banks, financial institutions. Then the threshold limit is 5,000. So let's say you have given a loan to the firm. That firm will deduct TDS if they are giving you interest more than 5,000. So in the entire amount, let's say they are in a year, they are giving you 6,000. then on 6,000 they will be deducting 10% TDS. If they are giving you 5,000 only in the entire year aggregate, they will not deduct TDS. Understood? Guys, very, very important. See, who is a deductor? Who is a deductor? The person who is paying you the money, he is the deductor. Correct. So here, interest on securities. Who is the deductor? The company who is giving you debenture interest. That company is a deductor. Correct. Who is the deductor over here? From whom we are receiving this money? Who is paying this money? The bank. Bank is the deductor. Post office is a deductor. Financial institution is a deductor. Correct? Correct, Shagna. Now, other interest. Who is the deductor? That borrower. Let's say it's a partnership firm. Those who have borrowed the money, they are giving us interest. These people are called deductor. Correct? To any individual I have given this money, that deductor. So these deductor can be any person, but not small individual or HUF. So this is a very common point in TDS. If the deductor is small individual or HUF, they will not deduct TDS. If the deductor is a big individual or HUF, they can deduct, or any other person. For any other person, there is no such thing like big and small. So let's say it's a company, whether it is big company, small company, doesn't matter. Company will deduct TDS. It's a partnership firm, whether it is big or small. I will not use this word big or small. Partnership firm can be a deductor, but individual or HUF cannot be the deductor if they are small. What is small? Means if their turnover of the last year, if their last year turnover is not more than 1 crore, or if they are carrying profession 50 lakh. So if their last year turnover of the last year, correct? So whether they can deduct TDS in previous year 24-25, it depends on the turnover of the last year, previous year 23-24. It depends on the turnover of the last year. Guys, turnover I will see only in case of individual or HUF. I'm repeating. If it's a company, I will not look at their turnover. They are big or small, doesn't matter. If it's a partnership firm, doesn't matter. Their turnover doesn't matter. Only in case of individual or HUF, it matters that what was the turnover of the last year. So if it is a small individual or HUF whose turnover the last year is up to 1 crore, right? Not more than 1 crore. If it is exact 1 crore, small, they cannot deduct TDS. But if the last year turnover of the individual is more than 1 crore, or if they are carrying profession more than 50 lakh, right? 1 crore will apply for businesses, 50 lakh will apply for profession. So if it is exceeding that limit, they can deduct you the TDS. But if it is a small individual or HUF, they will not deduct TDS. Have you understood this also or not? So let's say it's a individual, small individual, and they are giving you interest. But it's a small individual. They can't deduct TDS. TDS will not apply in that case. There is no TDS provisions in that case. But if this individual turnover of the last year is more than 1 crore 50 lakh, they will deduct TDS. Okay. So other interest is 5,000. Sorry. There is an important note. If receiver is bank or financial institution, TDS not applied. Please don't apply TDS. Not to apply. It's an important point. What does it mean? It means, let's say, you can write it. Let's say Reliance Limited. Reliance Limited has taken, it's a company, correct? Reliance Limited has taken a loan from HDFC. Reliance Limited has taken a loan from HDFC. Correct. So HDFC has given them a loan. Reliance Limited is paying interest. Reliance Limited is paying interest. Who is the deductor? Reliance Limited. Correct. Whether it will come over here, bank, post office, financial, no. Here, these are the deductor. These are the people who are paying the interest. But right now the bank is not paying, but it is receiving the interest. Correct? No issues here. So what I was explaining over here, it is that you deposited the money in the bank. The bank is giving you interest. The post office is giving you interest. The financial institution is giving you interest. Then this limit. Here, the financial institution is not giving you. Financial institution is receiving the interest. So let's say Reliance Limited. Say it's a company. Company is not big or small. They should deduct TDS on interest on loan. But if they are giving this interest to any bank or any financial institution, no TDS would apply. We cannot deduct their TDS. So if the receiver is, see, I have written, if the receiver is bank or financial institution, please do not apply TDS. Do not apply TDS. Have you understood this or not? Everyone, have you done this? Very good. Look at this question. It says, examine TDS TCS implication in case of following transactions. Briefly explaining provisions involved, assuming that all pays are resident. Pays means receiver. Payer means the person who pays. Pays means receiver. State the rate. Guys, these types of questions comes in examination, and 100% a question comes from TDS TCS, and quite similar. What they ask you that whether TDS would be applicable over here or not, and if it is applicable, tell us the rate of TDS. So you should know the rate of TDS. Even if you forget the section number, it's okay. Although for TDS, I would recommend that if you can know the section number, keep on revising it. You can make a small chart also for yourself of TDS. Spend some half an hour, make a chart of TDS rates and TDS sections. You will get to know. Still, if you don't have time, then it's okay. But still try to remember the provisions of TDS. Okay. So this type of question we'll get in examination. State the rate of TDS. We have to mention the at what rate TDS would be applicable, and the amount to be deducted. Then the amount in rupees, rate in percentage, amount in rupees. In case TDS is required to be deducted. So here we have to examine whether TDS would be applicable or not applicable. If it is applicable or not applicable, give the reasons. And if it is applicable, then also tell us the rate at which it is applicable, tell us the amount of the TDS amount. It says, on 1/5/2024, 1st May, Brijesh made 3 FD of 9 months each of 3 lakh each. Okay, there are guys 3 FDs. 3 FDs he has made. Each FD is for 9 months. And each FD is of 3 lakh rupees. 3 lakh, 3 lakh, 3 lakh, 3 FDs. Carrying interest of 9% with Mumbai branch, Delhi branch, and Chandigarh branch of CBZ Bank. The bank is one. The branches are different. Doesn't matter. Bank is one. Correct? We'll do the aggregate. Which has adopted a CBS. CBS is centralized banking system. Now all branches are one. The FD matures on 31/1/2025. The FD is maturing on 31st March 25. So we started the FD on 1st May 24, and they are maturing on 31st January 25. So they have already given that it is for 9 months. I think if we'll calculate also, then it is 9 months. May, June, July, August, September, October, November, December, January. Correct. 9 months are coming. So it is 9 months. Now tell me how much is the interest, the aggregate interest, because why? It's a different branches of one bank. So on one FD, 3 lakh rupees into 9% into 9 months. Can you tell me on one FD? 3 lakh into 9% divided by 12 into 9. 20,250. 3 lakh 9%. 9% per annum it is. It is 9% per annum. No? It is 9% per annum. So 9 by 12 you will have to do. 20,250 guys. Okay. Tell me here. Wait. And tell me what is the threshold limit which you will apply. First of all, tell me it is an interest on securities or interest other than securities. You have deposited the money in FD. It is securities or other than securities. Whether the bank has issued you any debentures, whether the bank has issued you any bonds, no. It is other than security. Understood? So if you have invested somewhere, they are issuing you bonds, they are issuing you debentures, then it is interest on securities. Here, once you go and deposit the money in saving account, whether they issue you debentures, no. If you go and deposit your amount in FD, whether they issue you securities, no. Simply, you will deposit the money. That's it. They will enter this in your passbook. That is. Or at most, they can issue you a certificate. That's it's not a security. Correct? It's not debentures, bonds, etc. Now, what is the threshold limit? Now the bank is a receiver, bank is the payer. Bank is the payer. What is the threshold limit, guys? Applicable. So whenever the bank is giving you, the post office is giving you money, financial institution is giving you 40,000. For senior citizen, 50,000. Everybody agree? Everybody agree? This is what you have written. Interest other than securities, this section would be applicable. And whenever the bank is giving you the money, post office is giving you the money, financial institution is giving you the money, the limit is 40,000 or 50,000 in case of senior citizen. Okay. So in this question, nothing is mentioned about senior citizen. Guys, on one FD, you told me 20,250. Everybody agree? Now on 3 FDs, how much would be the interest? 60,750, which is more than the threshold limit. Now tell me whether TDS would be applicable or not. You have to tell me. TDS would be applicable or not? Yes, applicable. It is more than 40,000 rupees. TDS would be applicable. Now, how you will write it? Please write with me. TDS would be applicable. Write with me. First point. As per TDS provisions, guys, if you remember the section number, you can write it. Section 194A. If you are confused about the section number, you are in doubt regarding the section number, don't write it. Right? Simply write as per the TDS provisions. If the interest from bank, financial institution is more than rupees 40,000, then TDS. No need to write 50,000 here because senior citizen is not there. 40,000 will also do. If you want to write 50,000 also for senior, you can write it. Otherwise, not that much required. It's more than 40,000, then TDS is applicable at a rate of 10%. Now, here, interest is equal to 3 lakh into 9% per annum into 9 by 12 into 3 FDs. Rupees 60,750. Therefore, TDS is applicable at rate of 10%, 60,750 into 10%, rupees 6075. They will deduct 6075. Correct, Deepa. Have you written this, everybody? Very good. Very good. Now, second part. Mr. Marwa, age 80 years. He's a senior citizen. In fact, super senior citizen. Mr. Marwa, age 80 years, holds 8% taxable saving bonds 2003. As I told you that on taxable saving bonds, remember this word taxable saving bonds, here TDS is applicable if the threshold limit is more than 10,000 rupees. And these are bonds. It is interest on securities or other than securities. This is interest on securities. Very good, Deepa. It is interest on securities. So Marwa, age 80 years, holds 8% saving. Rate of interest is 8%, right? Of rupees 2 lakh and 7.75% saving taxable bonds of rupees 3 lakh. He received yearly interest on these bonds on 28th February 2025. So he receives yearly interest, means every year he receives interest on this date. So how much is the interest, guys? The interest would be 2 lakh into 8%, 3 lakh into 7.75%. So 2 lakh into 8% is 16,000. 3 lakh into 7.75%, it is 23,250. So total it is 39,250, correct, Shagna? 39,250. TDS is applicable at a rate of 10%. It is more than 10,000. So rupees 3925 is the TDS amount. Please write it. So I'm not writing the complete thing. I think that you have understood. Also, please write that here the threshold limit is 10,000. Write in short. I think you will be able to do it. Write in your register. Write in your register. Threshold limit is 10,000 over here. Correct, Deepa. 20,000 into 8%, 16,000, 3 lakh into 7.75%, 23,250. So on it, 10% would be the TDS rate. 3925 interest on securities. Done? Just write this. Other statements, I think that you can easily make. Good. Now, very good. Now, look at this. AG Private Limited. It's a company, correct? AG Private Limited, it's a company. They took a loan of 50 lakh from Mr. Haridas. Have they taken a loan from any bank? No. If they would have taken a loan from any bank, TDS would not be applicable. Right? Reliance, do you understand that example of Reliance from HDFC? sorry, in that case TDS would not be applicable. But here they are paying interest to Haridas. Here TDS could be applicable. It credited interest of 79,000 payable to Haridas. During the previous year 24-25, we have given interest of 79,000 to him. We are giving 79,000 to him. AG Private Limited turnover was 60 lakh and 46 lakh during the previous year 23-24 and 24-25. Although we are concerned with the turnover of the last year, see if we are deducting TDS in previous year 24-25, we will see the turnover of the last year 23-24. My question to you is, this turnover you see for everybody or only for individual HUF? Only for individual HUF. So guys, examiner is confusing us by giving this turnover. Examiner is confusing us by giving this turnover. It's a company. Correct. It's a company. So company, whenever they are deductor, they are not small, they are not big. It does not depend on their turnover. For every company, every firm, every AOPVOI should be a deductor. They are a deductor. Only in case of individual HUF, we see that whether you are big or small. If you are big, more than 1 crore, more than 50 lakh, deduct TDS. If you are not big, do not deduct TDS. Correct. So you have to mention that turnover does not matter in this case. Can you tell me the threshold limit, guys? Okay, first of all, tell me, is it interest on securities or interest other than securities? AG Private Limited took a loan of 50 lakh from Haridas. It is other. There is nothing mentioned over here that it is bonds or debentures, etc. It's not mentioned, so it's other. Can you tell me the threshold limit? Very good, 5,000. For other, it is not bank who is paying you. It is not financial institutions. For other, it is 5,000. And how much you are getting? 79,000. So it is other than securities. Simply write in your, just write this, other than securities. 10% with the TDS rate, 10% into 79,000. 7,900 would be the TDS. 7,900 would be the TDS. And also mention, please write, you will able to retain it. Threshold limit is 5,000 over here. Understood? Now, okay, let me explain this one. Please write. Life insurance policy. Money received on life insurance policy whenever you receive money on life insurance policy, when you receive money on surrender or on maturity, this is not important to write, but still I'm writing surrender or maturity. Whenever this life insurance policy get matured or surrender, you receive the money. So money received on life insurance policy, very, very important. If it's a low premium policy, whenever you receive a life insurance policy, if it's a low premium policy, then such sum received is exempt from tax. Guys, whenever you receive money, so let's say if you have taken a low premium policy, what is a low premium policy? I'll explain. So if you have taken a low premium policy, and guys, at the maturity, if you receive any amount from this policy, that is exempt from tax. If it is exempt from tax, let's say I am an insurance company. Let's say I am an insurance company. You have taken a life insurance policy, and that life insurance policies are low premium. What is low premium? The premium is low. The premium is less. So if it's a low premium policy, and I'm an insurance company, I'm giving you money. Let's say, for example, I'm giving you 5 lakh rupees. So if it's a low premium policy, then that 5 lakh rupees is exempt in your hands. Guys, if it is exempt, what do you think? When I am paying it to you, should I deduct TDS? No. Why? Because it is not taxable in your hands. So I will not deduct any TDS. I'm an insurance company. I will not deduct TDS. I'll give you this 4 lakh, 5 lakh, whatever I am giving it to you without TDS. Why? Because it was a low premium policy. And low premium policy is exempt in the hands of the person who receives it. So since there is exempt from tax, therefore, no TDS. Also, I will not deduct TDS. But if it is a high premium policy, but what if it's a high premium policy? That is taxable. So the money received is taxable. Now let's say, correct, Shagna. So let's say if you are receiving this money and it is on a high premium policy, I'm an insurance company, I'm giving this money to you, and you are actually, this policy was a high premium policy, it is taxable in your hands. Therefore, since it is taxable, when I will be giving this money, I will also apply TDS. Therefore, TDS under section 194 DA is applicable. Therefore, TDS under section 194 DA is applicable since it's a high premium policy. 194 DA is applicable if I am giving you the amount, rupees 1 lakh. Up till 1 lakh, TDS will not be activated. See, it is taxable. No doubt it is taxable. But now the question is how much TDS I will deduct or when I will deduct. So if, although it's a high premium policy, but the money which I am giving it to you, it is not exceeding 1 lakh, TDS will not be activated. Understood? It is taxable in your hands, no doubt. But I will deduct TDS depends on the threshold limit. If the money which I am giving it to you, it is more than 1 lakh, then I will deduct TDS. If it is up till 1 lakh or less than 1 lakh, I will not deduct TDS. Have you understood till here or not? I'll tell you what is low premium, what is high premium. That's okay. Have you understood till here? So if you are getting a low premium policy amount, no tax for you, no TDS from my end. If you are receiving a high premium policy amount, taxable in your hands, so I will be deducting the TDS only if I am paying more than 1 lakh. If I am paying more than 1 lakh. Correct? Till here everybody is okay. Have you done this? Have you written till here? Tell me once you have written till here. Good. Good. Now, this section is quite important. Now, let's say I am paying you the money on high premium policy. Guys, the rate of TDS, this is changed now, 2% is changed. Earlier it was 5% up till I told you that all the TDS rate has been changed from 30th September, from 1st October. From 1st October, new rates are applicable. And till 30th of September 2024, it was 5%. Mostly they have changed where it was 5%, they have made it 2% mostly in almost all the sections, leaving one or two in almost all the sections. Understood? Rate of TDS would be 2%. Now, guys, let's say I'm giving you 1,50,000 rupees. Let's say I'm giving you, don't write this, don't write this. Just understand this. Don't write this, and then you will give the answer to me. Don't write this, guys. What I'm writing in black pen, don't write it. Let's say I'm giving you 1,50,000 rupees on 1st November 2024. On 1st November 2024, right? I'm giving you 150,000 rupees on low premium policy, no TDS. Agree? On no premium policy, no TDS. Let's say it's a low premium policy, no TDS. But let's say it's a high premium policy. I'm giving you 150 on 1st November 2024. Tell me the amount of TDS. Tell me the amount of TDS. Try. 5% or 2%? I'm giving you on 1st November 24. And it's a high premium policy, let's say. Just try. It could be right or wrong, doesn't matter. 2%, Siddharth. Okay. 2%. 2%, very good. It's not 5, it's 2%. Can you give me the amount also? Can you give me the rupees amount also? Siddharth, it's a high premium policy. It's a high premium policy. Okay. Now, threshold limit is 1 lakh. Right. Now, threshold limit is 1 lakh. I'm paying you 150 now. I'm paying you 150. It's more than the threshold limit. Siddharth, it's more than the threshold limit. Okay. Correct. Okay. Guys, 3,000 is actually not the correct answer. Actually, my question was incomplete. 3,000, and intentionally I have given it to you, so that you should not make a mistake in examination. No doubt, it's a high premium policy, taxable in your hands. And since the threshold limit is, correct, Chakna, since the threshold limit is more than 1 lakh, TDS would be applicable. And since you are receiving this money on or after 1st October 2024, 2% would be the rate. Now, this 2% is applicable on the income component. This 2% or 5% is applicable, write this, what I am writing in red pen, on income component. What is income component? Income component is that how much your income is. See, let's say, why I'm giving you the money? Because you must have paid premium also, na? You have taken this policy for 2 years, 3 years, 4 years, 5 years, whatever it is. You must have paid premium also. So let's say your premium was 20,000 rupees per month, per year. Your premium was 20,000 rupees per year. And you have paid this premium 6 times. 6-year policy. It was a 6-year policy. Now tell me, how much is your income? You have paid 20,000 per year as a premium, and you have paid it 6 times, 6 years. It's been 6 years. This policy was. So tell me, how much is your income? Guys, you will say, today I am receiving 150, but I have paid 20,000 every year for 6 years. That is 1,20,000 is the total premium you have paid. So your income is 30,000. Everybody is okay with this 30,000 rupees? Correct, Shagna? Everybody is okay with this 30,000 rupees? See, what is insurance? You pay premium. After few years, when it gets matured, I will pay you the amount. So you have paid premium for 6 years, 20,000, 20,000, 20,000. So you have paid premium 20,000 in every year, 120 total. I am paying you 150, correct? So 30,000 is the income component. Pradeepa, Darshni, Siddharth, have you all understood? Correct? So I will apply 2% on the income component. 2% on the income component. So 30,000 into 2%, the TDS would be rupees 600. Don't write it. I'll be explaining with the example. 600 would be the TDS. Now, guys, students make a mistake. They say, sir, TDS will not apply because the threshold limit is not more than 1 lakh. Array, you have to see the threshold limit on this amount. What we are giving, not on the income component, apply TDS rate. Threshold limit is to be taken on that amount which I am giving it to you. I am giving it to you more than 1 lakh. Right? 150 I am giving it to you. TDS is activated. TDS is activated. Now TDS would be applicable on the income component. Understood it or not? So I will apply threshold limit on the amount which I am giving it to you. Not on 30,000. 30,000 was the income. TDS I will apply on income. But threshold limit I will apply on the amount which I am giving it to you, 150. Got it? Everybody is okay with this? Now, what is a low premium policy? And I think that you know it because I have also discussed this in the chapter of deductions yesterday. What is a low premium policy? Same thing which I have discussed with you yesterday. If the policy date is before 1/4/2012 and the premium is up to 20% of sum assured, it's a low premium of sum assured. If the premium is 20% of the sum assured, it's a low premium policy. If it is more than 20% of the sum assured, it's a high premium policy. If the policy date is between 1/4/2000, I have told you now. Just remember this date, 1/4/2012. Yesterday I told you now. Same thing. If it is the policy date is 1/4/2012, between 1/4/2012 till 31st March 2013, 1 year, it is up to 10% of sum assured. It's a low premium policy. Or after 1/4/2013, after this, just this 1 year, 10% or 15% of sum assured, 15% for physically handicapped. If your policy amount, if the premium amount of the policy is up till, generally please take 10%, generally please take 10%. If the policy amount is up till 10%, then it's a low premium policy. If it is more than 10%, it's a high premium policy. But yes, it depends. If the policy is very, very old, before 1st April 2012, instead of 10%, take 20%. In case of physically handicapped, take 15%. So if the premium is more than this, it's a high premium policy taxable. If the premium is less than this, it's a low premium policy, no tax, not taxable, no TDS. Have you written it? I believe you have written it. Now look at the example. Now look at the example. Mr. Prabhakar. Mr. Prabhakar is due to receive 6 lakh on 31st March 2025. So he is receiving, guys, 6 lakh rupees. What he is receiving is more than 1 lakh. Agree? What he is receiving is more than 1 lakh. Towards maturity proceeds of LIC. So he is receiving 6 lakh rupees for the LIC. Correct? More than 1 lakh. Policy taken on 1/4/2021. So he has taken a policy on April 21, for which the sum assured is 5 lakh and the annual premium is 140. Guys, he has taken a policy on 1/4/2021. Which rate you will apply to see low premium or high premium? 10, 15 or 20? 10%, 15%, 20%. Tell me the date of the policy and just determine the rate which you will apply. 10%? Very good. So if the premium is up till 10% of the sum assured, it's a low premium. We will not apply TDS also. But if it is more than 10%, we will apply TDS. Now tell me the sum assured. Sum assured is 5 lakh. So if the premium is up till 50,000, 10% of 5 lakh, 50,000, we will say no TDS. Correct? Even whatever the threshold limit is, doesn't matter, no TDS, it's a low premium policy, exempt, no TDS. But here the premium, if it is up till 50,000, 5 lakh into 10%, 50,000. But here the premium is 140, guys. The premium is 140. It's a low premium or a high premium policy? High premium policy. Everybody got it? High premium policy taxable. High premium policy taxable. Got it? TDS will also apply. Why? Because the threshold limit is exceeding 1 lakh rupees. Now, when he is receiving 31st March 2025, tell me the rate of TDS. 2 or 5? Tell me the rate of TDS. He is receiving this money on 31st March 2025, 2%. After 1st October 24, it is 2%. Very good, Deepa, Aditya, Shagna. 2%. 2% on what? 2% on what? Income component. Agree? So what is the income component, guys? He is receiving 6 lakh. Now just see that how much premium he might have paid it. So he started it in April 21. He started this policy in April 21. Just see that how much every year he is paying premium. 140, 140, 140 he is paying premium. April 21, whenever you start your policy, you pay the premium first time. April 21, April 22, April 23, April 24, April 25 you are not paying. Why? Because March 25 it is getting matured. So April 22, April 23, April 24. Can I say that 4 years you have paid the premium? Correct, Dashni? You have paid the premium 4 years. So it means that 1,40,000 into 4. 560 you have paid the premium. Now how much is the income component? Six lakh, whatever the amount which you are receiving, minus 560. 40,000 is the income component. TDS would be 2%. 800 rupees. Please write it. First, write it's a high premium policy. So first you should mention that it is the policy is high premium as the premium is more than 10%. As the premium is more than 10%, it is a high premium policy. Please write this. In short, please write this. It's a high premium policy and the threshold limit is 6 lakh rupees. Okay, guys, wait. Fourth, fourth. As per the TDS provisions, if you remember the section number, you can write it, otherwise no issues. As per the TDS provision, if the sum received on life insurance policy exceeds rupees 1 lakh, where the premium is, I will not write 10, 15 and 20, all the three ones. No, here what is applicable is 10%. So I'll be mentioning only 10% rate. So where the premium is more than 10% of sum assured, so as per the TDS provisions, if the sum received on the life insurance policy exceeds 1 lakh, I have told them the threshold limit. I have told them what is high premium. Please, guys, these words, high premium policy, low premium policy, is for my and your understanding. Correct? So in your examination, don't use this word high premium policy or low premium policy. You can use it, but I would not suggest. You can use it still, but I would not suggest. Instead, use this, that the premium is, annual premium is more than 10%, 15%, 20%, as the case may be, right? So here, in this case, it is 10%. So I'll not refer 15 and 20 in my solution. Simple 10%. So where the premium is more than 10% of the sum assured, then TDS is applicable on income component. Rate 2% and up till 30th September 2024, if you want to mention, then 5%. Otherwise, no need. Sum assured rupees 5 lakh. Annual premium rupees 1 lakh 40, which is more than 10%. So now you understood it's a high premium policy. It is more than 10%. You understood it's a high premium policy. Period of policy. You have calculated it is 4 years. So income component is equal to 6 lakh minus 140 into 4. 40,000. TDS at rate of 2%. 40,000 into 2%, rupees 800. Let me know once you have written this. Good. Good. Guys, there is one more important section. In fact, two, three more important section I would like to discuss. Section 194M. Section 194M. It is TDS on contract or on professional services or on commission or brokerage. See, we have certain sections on TDS on contract like 194C. On professional services, we have 194J. On commission brokerage, generally we have 194H. But here in 194C, whenever you give a contract, it should be a business contract and only big individual. Yes, for your understanding, I'm writing this big and small, but in your examination, please write in the form of turnover, whose turnover is more than 1 crore or 50 lakh as the case may be. 1 crore for business, 50 lakh for profession, right? So in 194C, only big individual or HUF can deduct TDS. In 194J, only big individual or HUF. In 194H, also only big individual or HUF. So they made a section 194M. This section is applicable even if you are a small individual. If you are a big individual or HUF, you have a separate sections. You have their own specific sections. It is a general section. 194M is a general section, but important. 194M says that if it is applicable if the deductor is such individual or HUF where turnover of last year is not more than 1 crore or 50 lakh. 50 lakh we take in case of profession. So in other words, generally I call them small individual. It is applicable on small individual or HUF. First of all, write till here. Okay. Good. Here, why it is applicable on a small individual ratio? Because the transaction, although they are small individual, their turnover, let's say this is Mr. A. Let's say his turnover is less than 1 crore of business. He's a small individual. Or let's say he does not have even a turnover also. Let's say he's a salaried assessee. He's a salaried assessee, individual. His turnover is less or even he does not have a turnover. So TDS is not applicable. He should not deduct TDS. But actually the type of transaction which he is making is very significant. Actually, he is giving a contract. Let's say he's a salaried assessee. Or let's say it's a very small business or profession. Less than 1 crore or 50 lakh as the case may be. But the type of transaction which he is making is very significant. It means he is giving a contract to someone which is more than 50 lakh. Or he is giving a professional fees to someone more than 50 lakh. Let's say also for personal nature, he is giving professional fees. Let's say for lawyer, let's say he has some issues with his brother, with his wife, with his any family member, and he is giving to a lawyer such a professional fees more than 50 lakh. or he is giving a commission or a brokerage of more than 50 lakh. Although this person is a small individual or HUF, either his turnover is less or he even don't have a turnover. But the type of transaction which he is entering, it is more than 50 lakh. So here, the threshold limit is 50 lakh. So as soon as you are paying any amount which is more than 50 lakh, TDS will be activated. So if you are paying 51 lakh, then TDS will be activated on entire 51 lakh. Threshold limit is 50 lakh. Rate of TDS. Rate of TDS is again 2%, but up till 30th September 24, it was 5%. It was 5%. Example. Let's say Mr. A, he is a salaried assessee. And he has given a contract. Let's say he is getting his house constructed. He has given a contract for the construction of the house. Let's say it's a very personal nature house. So Mr. A is a salaried assessee and he's given a contract to Mr. Z. And on 1st April 24, he is paying 10 lakh rupees to him. On 15th May 24, he is paying 30 lakh rupees to him. On 18th October 24, he is paying 12 lakh rupees to him. And on 1st January 25, he is paying 3 lakh rupees to him. Okay. So what will happen? In the year, how much we are paying? 10, 30, 12 and 3. 55 lakh we are paying. Right. So TDS would be applicable. So what will happen here? In this case, until it is up till 50 lakh, until it is up till 50 lakh, no TDS. So here, no TDS, no TDS. But here it is exceeding 50 lakh. So here TDS would be there. And since it is 18th October 24, so TDS would be there 2% on 52 lakh, on entire 52 lakh. And here TDS would be 2% on 3 lakh. See, up till here we have deducted the TDS now. So here 2% on 3 lakh. Understood or not? It is, had it been before 30th September, I would have applied 5%, but it is now on 18th October, we are doing it 2%. And if somebody has doubts, sir, although this money belongs to before 30th September, doesn't matter. Here is actually the TDS liability has arisen. Here actually the TDS is activated. So we will see this date, correct? 2%. I believe you have done. So 194M is quite an important section. Same way, we have one more section which is important, which is 194N. This is TDS on cash withdrawal. This is TDS on cash withdrawal. 194N. So here again, TDS would be applicable if you withdraw cash from any bank, cooperative bank, or post office. if you withdraw cash from bank, cooperative bank, post office, TDS would be applicable. Now, how much TDS would be applicable? It depends on the category which you belong to. It depends on the category which you belong to. If a person who is withdrawing the cash, the assessee who is withdrawing the cash, if he is filing ROI on time, then there is a separate rate. This is the first category. And if this person is not filing his ROI on time, these are called non-filers. These people are called non-filers. So if you are not filing your ROI on time, you will be called as non-filer. So what would be the TDS rate? First of all, the people who are filing their ROI on time, from if the cash withdrawal is from 0 to 1 crore, no TDS. Guys, here on the entire amount, we don't deduct TDS. It is like slab rate. 0 to 1 crore, no TDS. And if it is exceeds 1 crore to infinity, the TDS rate is 2%. And if you are filing your ROI on time, not on time, if you are a non-filer, then 0 to 20 lakh. See, if you are non-filer, after 20 lakh, we will be deducting your TDS. 0 to 20 lakh, no TDS. From 20 lakh to 1 crore, 2% TDS. And from 1 crore to any other amount which is going above, 5%. Guys, it is more, right? More than 20 lakh, more than 1 crore. Up till 20 lakh, up till 1 crore, it's here. So what does it mean? It means, let's say here, example. Here, if the person withdraw rupees 1.1 crore, so if he is a filer of ROI, he is filing his ROI on time, and he withdraw 1.1 crore. So up till 1 crore, there is no TDS. In excess of 1 crore, so only on TDS would be 2% in excess of 1 crore. So it would be on 10 lakh, 0.1 crore. So it would be 20,000 rupees. And here, if the person withdraw 1.1 crore, first 20 lakh, it's like slab rate. First 20 lakh, no TDS. Next 20 lakh to 1 crore. Next 80 lakh at a rate of 2%. 1,60,000. And remaining 1 crore to infinity, next 10 lakh, remaining 10 lakh at rate of 5%. 50,000. So total TDS is 2,10,000. Let me know if you have done this. Very good. Correct. So guys, it is not on the entire amount, but it is only in excess. So this is one of the section where it is in excess. Now, who is a filer of ROI on time? ROI. Okay, one more change. Not that important. If note. If the amount, if the assessee is, if assessee is cooperative society, let's say there is any cooperative society, they have their bank account in SBI, right? So who is withdrawing? Cooperative society is withdrawing the cash. If cooperative society is withdrawing the cash, so they have an account in SBI, they are withdrawing the cash. If assessee is a cooperative society, then replace rupees 1 crore by rupees 3 crores. So wherever you are seeing 1 crore, just replace it by 3 crores. So what will happen is, if the person who is withdrawing is a cooperative society, let's say they have their bank account in SBI, HDFC, wherever, they are withdrawing the amount. So 0 to 3 crores, wherever you are seeing 1 crore, it will become 3 crores. So let's say this cooperative society is filing their ROI on time. So 0 to 3 crores, no TDS, 3 crores to more than 3 crores to infinity, 2%. Here 0 to 20 lakh will not be replaced, 1 crore would be replaced. So 0 to 20 lakh, no TDS, 20 lakh to 3 crores, 2%, 3 crores, more than 3 crores, 5%. Understood? So if the person who is withdrawing is a cooperative society, the assessee is a cooperative society, just replace 1 crore with 3 crores. 20 lakh will not be replaced, 1 crore would be replaced. Now, who is the filer of ROI on time? What does this mean? Filing ROI on time. If all last 3 years return, if all last 3 previous year returns, if last 3 ROIs are filed on time, I'll file up to due date. If all last 3 years ROI are filed up to the due date, it means if the withdrawal year is previous year 24-25, this is the withdrawal year, previous year 24-25. So we will see that whether you have filed your ROI of last 3 years or time or not. So we will see your previous year, last 3, 23-24, previous year 22-23, previous year 21-22. We will see your last 3 years, last 3 previous year, whether you have filed the ROI on time or not. So let's say the due date of this ROI is 31st July. So we will see that whether you have filed. So let's say if it is previous year 21-22, so its due date is 31st July 22. So whether the ROI is filed up till 31st July 22, yes. This due date is 31st July 23, whether it is filed, yes. 23-24, 31st July 24, whether the ROI is filed on time, here let's say yes. So if all 3 returns are filed on time, yes, 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 then we will say that you belong to first category. But if any of them says no, let's say this is yes, but this is no, so you belong to second category. This also understood, I believe. So if all last 3, all this are filed on time, then it is your first category, otherwise second category. Correct? Now, there is a little more point which is not that important, but still. Now, practically, let's say a person, let's say for example, Satish. Let's say Satish is withdrawing the money in April 24. Let's say he's withdrawing the money 23 lakh. Directly he's going into the bank and he's withdrawing the money from his bank account 23 lakh. More than 20. Now, let's say I am a bank manager. I want to know that whether Satish belongs to filer category or non-filer category. Because see, if he belongs to filer category, first category, then I am not worried till 1 crore. But if he belongs to second category, then I should deduct TDS also because I am the bank. Everybody agree? So let's say in April 24, he is withdrawing 23 lakh. So I will see his last 3-year returns. Last 3-year returns are these 3 years. Okay. This return was filed on time. This return was filed on time. And what was the due date of this year? The due date of this year is 31st July 24. And right now I want to see in April 24. So this due date has not yet expired, right? And Satish is saying, sir, I will be filing this return also on time. But guys, I don't know now whether Satish will be filing it on time or not. Because why? Because I want to know in April 24 whether it is filed on time. So I found that this year return was not filed as of now. Why? Because the due date is still there. So he's saying, sir, it is April going on. I will be depositing my RY in the month of May, June or July. That is filed on time. But I want to know in April itself. So in that case, I will not see this year. I will go one more year back. So in this case, I will see 22, 23, 21, 22 and previous year 2021 also. So I will go one more year back, previous year 2021, and I will be seeing these 3 years. I will not see this year. Why? Because the due date of this year is not expired. So in this case, these 3 years will be considered, not this. So only we have to see those last 3 ROI are filed up to date. Which last 3 where due date is expired. Only those years you will see where due date is expired. Have you understood this also? So to determine whether you are filing your return on time, you are category 1 or category 2. So we will see your last 3 year returns and only those last 3 years where the due date has expired. All done? Got it? So these are some of the important sections of TDS. These are some of the important section of TDS. I would like to touch upon advanced text also. Although advanced text is not that a concept where we see your questions every time. From 1 or 2 attempts, I'm not seeing question on advanced text, but it is an important topic. If question comes anytime, it would be around 5 marks. It would be around 5 marks, at least 4 to 5 marks. So that is also an important concept, and most of the students, I don't know why they leave it. So let me discuss that because we can't take chances. So it is not frequently repeated, but whenever it will come, it will be for almost 4 to 5 marks. Okay. Question number 13. It says, Miss Priya, age 61 years, has total income of 7,50,000, including income from profession, and has paid advance tax of 10,000 rupees on 13/12/2024. Okay. So she is of the age 61 years. She is a senior citizen. She has total income of, this is the total income 750, which has income from profession. It means that she has PGBP income also. For assessment year 25-26, that is this income she has earned in previous year 24-25, right? 24-25 she has earned this income. And what is advance tax, guys? What is advance tax? Whatever we deposit during the year, that is what advance tax. So this is previous year 24-25. So whatever is deposited up till 31st March 25, it is called advance tax. After that, which we deposit, that is called self-assessment tax. So any tax which is deposited during the previous year itself, that is called advance tax. So we know that there are certain liabilities to pay advance tax. I believe that you must be knowing it, that four times in a year, 15th June, 15th September, 15th December, and 15th March, we have to pay our advance taxes, right? So whatever is my advance tax liability is, I have to pay that. She has filed her return of income on this date. Calculate the self-assessment tax and the interest thereon. What is self-assessment tax? We have to calculate that how much tax she has now have to pay while filing her return. And also there is interest under section 234A, 234B, 234C. We have to calculate the interest also, 234A, B, C. I believe some of you might be knowing it, how to calculate it. I also know that some of you might not be knowing it also, how to calculate. Don't worry, it's not that difficult. I'm explaining it right now. She has opted out from the default tax regime. She is following optional regime. Okay. Guys, please write with me. Advance tax. Guys, advance tax is applicable. It is applicable on all assessee if their advance tax liability, is 10,000 or more. If their advance tax liability is rupees 10,000 or more, then it is applicable, right? So now what does advance tax liability means? Keep on writing with me, guys. We are running short of time. Please keep on writing with me. What does advance tax liability means? Advance tax liability is equal to your tax liability minus TDS minus TCS minus, that's it. This is called advance tax liability. So let's say your tax liability comes to rupees 70,000 and your TDS is 40, your TCS is, let's say, 25. 70 minus 40 minus 25 comes to 5,000 rupees. So advance tax liability is coming as 5,000 rupees. You are not supposed to follow the advance tax provisions, right? Because advance tax provision is not applicable on you. Why? Because your advance tax liability is not touching 10,000. Even if it is 10,000, advance tax provision is applicable, right? 10,000 or more. So let's say your tax liability comes to rupees. Let's say your tax liability comes to rupees 1 lakh. TDS is 80,000. TCS is TCS is 10,000. 1 lakh minus 80 minus 10. 10,000. Advance tax provision is now applicable on you. First of all, I believe everybody understood this. Correct? Just TDS and TCS you have to minus and then see what is my advance tax liability. Second thing is note, even if for some people, even if the advance tax liability is 10,000 or more, but if they are resident senior citizen, they are exempted from advance tax obligation. They are exempted from advance tax. If you are a senior citizen, resident senior citizen, then no need to follow advance tax. Just pay your tax once the year is over while filing your return. No need to pay your advance taxes. Correct? In our question, she is 61 years of age. Nothing is mentioned about residential status. So we always assume that the person is a resident. If nothing is mentioned, the question is silent. Do we assume non-resident? No, we always assume resident. So she is a resident also. She is a senior citizen also. So advanced tax liability is not applicable on her. However, resident senior citizen are exempted from advanced tax, but not those senior citizens who have PGBP income. So only those exempted who does not have PGBP. Those people are exempted. But if you have PGBP, you are not exempted. So in this question, we have read that she has some PGBP income also, no professional income. She is not exempted. I believe you understood this also. She was having the PGBP, including her profession income they have given. So she is not exempted. Although she is a senior citizen, but she is not exempted. Pradeepa, how can we come to know advanced tax is more than 10,000? Don't worry about it. I'll tell you. Right? Don't worry about it. Okay, now. See, I'll not be able to answer so many questions because advanced tax topic again takes at least 2.5 hours to explain. But right now I have only maximum 10-20 minutes. So I'll be explaining most of the things, whatever I can explain in this 10-20 minutes. Right? Okay, now let's say you don't know that whether your liability would arise or not. We will see actually in our examination. Right now I'm more focused with examination purpose. Had it been a regular or fast track batch, I would have definitely explained everything to you. But yes, for examination purpose, see, if you don't follow your advanced tax, so what are the consequences? The consequences is interest. If you don't follow advanced tax, so if advanced tax provision is applicable and we do not follow them, for examination purpose, you should remember, if we do not follow them, then consequences is 234C interest we have to pay. 234B interest we have to pay. There are two consequences. We have to pay 234C. We have to pay 234B interest. So you should know that how much is the interest. So let's say, don't look right now for your examination purpose, Pradeepa. I would say, don't look from the assessee point of view. Look from the income tax point of view. In your examination, this will have. Had it been from assessee's point of view, I would have told you in regular classes or fast track classes. Not today, right? So for your examination purpose, I'm telling you, look at from the point of view of income tax department. Correct? That how much interest they will take. Because advanced tax provision is applicable on you, then just look at from the point of view from the assessing officer that how much interest he will ask from you under section 234C, how much interest he will ask from you under section 234B. Correct? Look at from the point of view the income tax department for examination purpose. Now, what is advanced tax provision? You have to pay whatever is your advanced tax liability is. Whatever is your advanced tax liability is. Now, let's say there is a return which comes to you. There is a ROI. You are an assessing officer, right? For your examination purpose, just see this chapter from the point of view of the assessing officer. Let's say you are the assessing officer. So let's say if I have filed a return today or at any day, I have filed my return, let's say, and you see that Rajat sir has filed his return. What is the total income? Whatever is this tax liability? Then see what should be his advanced tax liability after deducting TDS, TCS. Then see whether Rajat sir TDS provisions was applicable or not. And if they are applicable and I have not followed it properly, then apply 234C on me. Simple. If advanced tax provision is not applicable, if advanced tax provision is if advanced tax provision is not applicable, why? How can it not be applicable? Let's say this advanced tax liability is less than 10,000, not applicable. So if it is not applicable, don't apply this interest. But if it is applicable, apply this interest. Now, if it is applicable, so every quarter on 15th June of the previous year, for our year it is 15th June 24, this is the first installment. On 15th of September 24, 15th of December 24, and 15th of March 25. Government requires, the assessing officer requires that up to 15% of up to is common for everything, right? At least up to 15% of your advance tax liability. Guys, up to 15% of your advance tax liability, you should deposit to the government. Here, 15 September 24, up to 45% of advance tax liability, you should deposit. Please keep on writing with me. Up to. Here, up till 75% of advance tax liability should be deposited. And here, 100% of advance tax liability should be deposited. These are the installments. These are the installments. Guys, if you follow your installments properly, 234C interest will say, okay, I'm okay with it. I will not be applicable. But if you do not follow your installments, properly, then 234C would be applicable. What is properly? Either you don't deposit it or you deposit but with very less amount. You deposit but with very less amount. Correct? Have you written till here? I'll explain 234B later. First 234C. Are you all okay with this? Good. Good. Now, you are an assessing officer. Remember that you are an assessing officer, right? Miss Priya, age 61 years, has total income of 750, including, although she is senior citizen, but she has PGBP income, 750 total. She has paid advance tax on 10,000 rupees on December 24. December 24 is this year. She has paid advance tax, but she has not paid in June. She has not paid in September. She has paid in somewhere in December. That's okay. She has filed the return of income on this date. Compute the self-assessment tax and the interest under 234A. I have not discussed what is 234A. I have not discussed what is 234B. We are more focused right now on 234C. 234C is when you do not deposit your installments on time. Solution number 13. Everybody write with me. This person is following optional regime. It is given to us. Now, her total income is 7,50,000. Her total income is 750. Compute her tax liability. She is a senior citizen opting for optional regime 0 to 3 lakh nil. First 3 lakh nil. 3 lakh to 5 lakh. Agree? 3 to 5 lakh. Next 2 lakh at rate of 5%. 5 lakh to 10 lakh. But she is going up to 250. So remaining 2.5 lakh at rate of 20%. $60,000 plus 4% cess. 2,400. 62,400 is the tax liability. Correct? From tax liability, we deduct only two things. TDS or TCS. We don't deduct advanced tax, right? We are computing our advanced tax liability. Correct, Deepa? Dashni, it is 62,400. TDS, TCS is 0. In this question, there is no TDS, TCS is given. Advanced tax is given, sir. No, I can't deduct advanced tax right now. I have to see my advanced tax liability. Only TDS, TCS. My advanced tax liability is 62,400. This is what assessing officer is doing it, right? Once your year is over, assessing officer is computing your 234C. Everybody is okay with this? 62,400 is my advanced tax liability because there is no TDS, TCS in this question. Correct? Everybody done till here? Now, assessing officer is doing it. I'm not doing it from the point of view of the assessee. How assessing will come to know whether my advanced tax liability would be more or less. Guys, he will come to know, but right now I'm not discussing that. My focus is 234C and 234B. First of all, 234C. Now, his first installment, leave one line. His first installment is due on 15th of June 24. Leave one line in between. 15th of September 24. Leave one line in between. 15th of December 24. Leave one line in between. 4th. 15th March 25. He was supposed to pay amount to be paid, tax to be paid. How much was the assessing officer will ask from her? Here he will ask 15% from her. 15% of what? 15% of this amount. 15% of advanced tax liability. So how much it is? 9360. He will ask you 9360 from here. Up till this amount you should deposit it. Here he will ask 45%. 28,080. Here he will ask at least 75% you should deposit. 46,800. And here 100% he will ask. At least up till here you should have deposited all your advanced tax liability 62,400. Everybody is okay with this? Please write small because we have to make certain columns. This is what the assessing officer was requiring from you. Pradeepa, got it now? This is what up till this date, I'm using the word up to. Up till this date, this amount government needs. Up till this date, this amount government needs. Up till this date, this amount. Up till this date, total amount government needs it. Now, we will say this is the tax to be paid. Now we'll see how much you have paid. Tell me, if in this question, if we would have paid anything up till 15th June, I would have written it over here. But I think she has paid on 13th of December 24, 10,000 rupees. Okay. I will here ask you that up till 15th June, how much is paid? 0. Agree? She has not paid here. If she would have paid here, I would have written it. She has not paid anything. Up till 15th September, if on any day, assessing officer will see that how much is deposited by the assessee up till 15th September, in this question it is 0. Now, assessing officer will see that how much is deposited up till 15th December. So up till 15th December, 13th December, we have deposited 10,000. So on this, up till this date, 10,000 was there. Are you all okay with this? And after that, there is no TDS. But if assessing officer will see on this date that up till this date, how much amount the assessee has deposited. So only 10,000 he has deposited. Can I write 10,000 here also? Because this is cumulative. I'm saying up till this date, how much is deposited. Are you all okay with this column also? Pradeepa, Akshay, Aditya, you're all okay with this column? Now, I believe that there is no doubt that I have written 10,000 here, 10,000 here. Why we are saying that up till this date, assessing officer will see up till 15th of December how much this assessee is deposit, 10,000. And on this date, he will say up till this date how much is still 10,000. So he'll write 10,000. Now, we will see how much is the short amount. We will see how much is the short amount. 9360. What is the short amount? This is required. How much you have paid? 0. How much is the short amount here? 28,000 minus this 28,080. How much is the short amount over here? Do you all agree it is 36,800? And it is 52,400. Good. This is the short amount. Guys, whatever is short amount, government will charge interest on it. Government will charge interest on it. Interest rate is 1% per month. Interest rate is 1% per month. So now the last is, if you don't have space, you can write it in this column only. If you have space, now interest. Guys, first of all, remember, interest is charged on multiple of 100. Anything which is here, 234C interest. I'm talking about only about 234C, not for any other section. 234C interest is charged on multiple of 100. If anything which is in fraction of 100, we'll ignore that. So it is 9360, 60 rupees. It should be multiple in 100. I will charge interest on 9300. Any fraction of 100 shall be ignored. Have you understood this also? 36,800 I will write like this. 52,400 I will like this only, because it is multiple in 100. Last two were in multiple in 100 already. The first two were in not multiple of 100. So any fraction of 100 shall be ignored. Have you understood this also? 234C. Now, it is 1% per month. It is 1% per month. 1% per month. 1% per month. 1% per month. And it is fixed. In first 3, it is fixed. 3 months, 3 months, 3 months. Last is 1 month. 3 months, 3 months, 3 months, and first is it is fixed. 3, 3, 3, 1. Guys, how it is 3? See, government first needs your money from 15th June. From 15th June till 15th September. If you have not paid this, 3 months. So this 3 months is actually, I'm just explaining it to you. This 3 months is actually from 15th June till 15th September. This 3 months is from 15th September to 15th December. This 3 months is from 15th December to 15th March. And from 15th March till 31st March. It is almost 15 days. Part of the month we take as full months. That is the reason it is 1 month. So it is 3, 3, 3 and 1 fixed. Even if somebody has deposited the money on 16th June also, I will keep it 3 only. I'll keep it 3 only. It's fixed. 3, 3, 3, 3, 3, 3, 1. 1% per month. So how much is the interest? It is 1%. It's not per annum. It is 1% per month. 9,300 into 1% into 3. 279. 840. 1104. 524. 2747, I believe. This is the interest under section 234C. 2747 is the interest under section 234C from the department point of view. Everybody understood this 234C? One more thing regarding 234C. Guys, there is a relaxation in the first two. 234C gives a relaxation in first two installments. In first two installments, 234C gives a relaxation. What is 234C is telling us? That although you are supposed to pay 15% in the first installment, in the second installment you are supposed to pay 45%. Like, guys, this relaxation is 234C only in first two installments. Only in first two installments. In first two installment, we will say that although you are supposed to pay 15%, even if you would have paid it at least 12% also, then we will not charge 234C. At least if somebody has paid something, how much? At least 12% also, then 234C in the first installment we will relax. We would have relaxed it. But here this guy has not even paid 12%. Right? So guys, what I'm telling you, how much the government is requiring? 9360. This is 15%. Just tell me how much is 12% of this? 62,400 into 12%. 7488. Guys, even if the assessee would have paid 7488 at least, 7488, if the assessee would have paid it 7488 or more, then I would have relaxed this. I would have not charged interest on this installment. But if the assessee has paid nothing or less than 7488, then I will, whatever is the short amount, then I will attract 234C. Have you understood this or not? So even if you have paid 12% or more, if you paid 12% or more, 234C in this will not be charged. First installment relaxed. But if you pay less than 12%, so let's say if you have paid 12% was 7488. Okay, 7488. Let's say if somebody would have paid 7,000, which is less than 12%, now you will not get relaxation. Whatever is the short amount, then 1% would be there. Got it? Here, the relaxation is we need 45%, but even if you would have paid it up till 36%, at least. So we require advanced tax liability 62,400 into 45%, we require 28080. But guys, if you would have paid 36% also, then I would have not charged this. Okay. So these two relaxation are only in first installment in 234C, not in the third and fourth installment. 12%, 36%, not that important, but yes, you can write it. Now, this is 234C interest. Guys, can I say on 15th June 2024, first installment was due. First installment was due. So 15th June till 15th September 24. This is the first installment. From 15th September, second installment will start. 15th of December 24. Then your third installment will start. 15th of March 25. And then the year will end on 31st March 25. The year will end. So if you have defaulted in the first installment, we have charged 3 months interest from June till September, fixed 3 months. If you have defaulted in the second installment, straight away 3 months, September till December, 3 months. From December to March, 3 months. And from 15th March till 31st March, only 15-16 days are there. So we will round off the number of part of the month is taken as full month. So 1 month is there. So this is 3331. Understood this also? 3. This is 3331. I can say My 234C ends on 31st March 25. 234C ends on 31st March 25. From this point, 234B starts. After this, 234B starts. It's like a relay race. Relay race, you understand a relay race? One sports person actually has a torch or a rod in his hand. He will run. From that point, another player will run. So this is a relay race between 234C and 234B. Not with 234A, but 234C is the major interest which you need to calculate. Then it is 234B will start. 234B is 1% per month. It is 1% per month. So 234B says on 1st April 2024, he will see that how much money is not yet paid. See how much money is not yet paid. So we require that you should have paid advance tax 62,400. But you have paid only 10,000 rupees up till now. On 1st March, if we will see, the assessee has not paid on 1st April, sorry. The year has gone now. Your advance tax liability was 62,400. How much you have paid? Your advance tax liability was 62,400 and you have paid only 10,000 rupees. 52,400 you have not yet paid. On 1st April, government will see that this assessee should pay 52,400 rupees, but why he is not paying it? From 1st April, see 31st March 234C was done. Now 234B will take over and 234B will charge interest 1% per month up till the date when you pay the interest. Up till the date when you pay the interest. So we assume that the due date when you are filing the return, you pay your interest. So please tell me, in this case, we have filed the return on 15th of June 2025. We have filed the return on 15th of June 2025. So from 1st April till 15th of June 2025, will charge interest. Government needs this 52,400. They need 62,400, but 10,000 you have paid. So on 1st April, what was the outstanding? 52,400. So they will charge interest for April, May, June. Part of the month is taken as full months. So here it is coming April, May, June, 3 months. Had it been 15 July, 4 months. So 234B would be start from 1st April. So whatever is the amount which is outstanding, 52,400 into 1%. So it is April, May, June. June part of the month is taken as full month. So it is coming as 3. It would have been 15th of July. I would have taken 4 months. It would have been 15th of August. I would have taken 5 months. Whenever you are depositing your ROI, then we will take. So it is 3 months over here. So 234B interest is 52,400 into 1% into 3. 1572. This is 234B. Have you written this? 1572. 234B interest will go on till you don't pay your taxes. And generally the time when you file your return, we charge 234B. Then there is one more which is not at all important. 234A. 234A interest starts from, guys, there is no relay race between 234B and A. 234B will go on till you don't pay your taxes. 234A starts from next day from the due date of ROI. Next day from ROI due date. Till you don't pay your taxes. Till not paid. So it starts from 234A is attracted if you don't file your ROI on time and still you are not paying taxes. So it starts from, let's say if your due date is 31st July, it starts from 1st August onwards. Let's say somebody deposits his ROI in the month of October, November after 31st July. So from 1st August, we'll calculate the interest. Correct? It is not at all important. They rarely ask you. but it is from 1st July onwards. But in this case, actually, we have filed the ROI on 15th June. So assuming that due date is 31st July, we have filed our ROI earlier. So in this case, there would be no interest. Why? Because we have filed the ROI before it. So we have paid the taxes before ROI due date. So here it would be no taxes. Yes, 234B and 234A can go together. Why? See, have you written everything which you are seeing over here? Have you written everything which you are seeing over here? Good. See, this is previous year. It ended on 31st March 2025. Till date, this is the previous year. Till date, here it is 234C interest will go on. And from now, from 1st April 2025, 234B. This is 234B will go on. Let's say somebody is depositing his ROI, for example, on 15 December 25. So 234B will go on from 1st April till 15 December 25. But somewhere here 234A will also start. Let's say this is the due date, 31st July 25. This is the due date. Now 234A will also start. So there would be this period, guys, this period, double interest is there. 234A is also there, 234B is also there. Hardship on the assessee, let it be. Income tax says why you are not depositing it, even your due date has expired, let it be. So till here it is 234C. It's a relay race between 234C and 234B. 234B starts from the date when 234C ends, and 234B starts from 1st April onwards until you don't deposit. Red line is 234B, and after due date 234A will also start. Understood this? Your homework for today is question number 14 and question number 15. So most of the things I have discussed with for advanced text. There are very few things which I have not discussed, but most of the things I have discussed for the advanced text also. Right. So please, from tomorrow we'll be starting. From tomorrow, actually, there would be important classes now starting, because right now till here I was doing chapter-wise revision, but from tomorrow it is very important. Class 7, 8, 9, and 10, where we'll be discussing the total income questions. Everything would be total. And I'm telling you, these classes, these 4 classes would be very, very fruitful. These classes also are super, but those classes would be more beneficial to you. So let us meet tomorrow at 7:30. So we have stretched our class too much today. Bye. Take care. Bye. Take care.